Hello everybody, what's going on? So today we are looking past the quarterly noise to address the fundamental question. Can SOFI actually meet the massive growth expectations investors have baked into the stock? To understand where the price is going, we have to look at the financial super app transition. The CEO Anthony Noto has been incredibly vocal about investing heavily right now to refine existing product while simultaneously launching next ones. This isn't just about being a digital bank, it's about capturing the total wallet share of the member's life. When we see capital raise like the opportunistic billion dollar equity sale, it signals that management is playing offensive. They aren't just surviving, they are stockpiling dry powder to fuel customer acquisition and R&D while the market is ripped. One of the most critical yet overlooked metrics is the latest data, which is unaided brand awareness. This hits an all-time high of 10% recently, up to 300 basis points from the last year. Now, why does a financial host care about brand awareness? Because it directly dictates your CAC, customer acquisition cost. When you see the SoFi name on a stadium or sponsoring major NBA tournament, it isn't just vanity. It's built a foundation of trust. When a potential customer eventually sees an ad for a SoFi credit card or a high yield saving account, the friction to join is significantly lower because they already recognize the brand. This 10% mark is a tipping point as awareness grows. The efficiency of every marketing dollar spent in improves, which is the secret sauce for long term profitability. Beyond traditional bank, SoFi is doubling down on the technology of future. The integration of blockchain and crypto isn't just a play for loyalists. It's about capturing transaction value in a world that is moving towards stablecoin and instant digital settlement. Even if the hype of 2021 has cooled, the utility of blockchain for lowering cost in customers and business transaction is very real. By building this ecosystem now, SoFi ensure they don't disrupt by the next wave of fintech. They become the disruptor themselves. Now let's talk about the relaunch of SoFi Plus. This is their premium subscription tier offering over 1000 in annual value for a normal monthly fee. The early data from the April launch is showing something fascinating. The vast majority of new subscribers are existing members. This is the definition of increasing the lifetime value LTV. If you were only using SoFi for a checking account, this membership nudge, you use them for investors, saving, and loans. You are moving from a single product user to multiple product loyalists. For investor, this means the average revenue per user is climbing, making each customer significant more valuable over time without the company having to spend more to recapture them. This is a great strategy, I would say. I know the concern. Does the frequent stock issuance create a ceiling on the stock price? In near term, perhaps management has shown they will sell stock up opportunistically when it near certain highs to fund growth. However, for long-term investors, this is a feature, not a bug. They are prioritizing a massive dominant future over a quick pop in share price today. They are building a fortress balance sheet to ensure that when the macro environment shifts, they are the last one standing. So, where does this leave us? When you look at the synergy between brand awareness, the expansion into crypto tech, and the success of SoFi Plus in deepening member engagement, the trajectory is clear. We are watching the construction of a modern financial titan. While the market might fret over short term dilution or quarterly fluctuation, the underlying engine, the financial flywheel, is spinning faster than ever. If SOFI continue to convert brand recognition into multi-product relationship, the growth potential isn't just fulfilling expectations. It's likely to exceed them. This is a company building for next decade, and for those who can look past the immediate horizon, the upside remain incredibly compelling. So to truly understand the long-term outlook, why it is so favorable, we have to look under the hood at the vertical integration strategy. Most people see SoFi as just the app on their phone, but the acquisition of Galileo and Technisys turned them into the AWS of fintech. By owning the underlying payment processing and cloud core banking platform, SoFi isn't just paying fee to other banks, they are collecting fees from their competitors. This creates a massive margin advantage. As more regional banks and global fintech look to modernize their infrastructure, they turn to SoFi technology stake. This B2B revenue stream provides a diversified cushion that traditional customers bank simply doesn't have, allowing the company to remain aggressive even when the customer lending market faces headwind. What we are witnessing is early stage of compounding machine. Every new member added today feeds into a system that is designed to keep them. The positive feedback loop is clear. Higher brand awareness leads to lower acquisition cost, which leads to higher profit margins, which then gets reinvested into better product like SoFi Plus. Further, looking in the user base, while the path for any growth stock is rarely a straight line, the structural foundation being laid right now suggests a company that is outgrowing its startup level and maturing into a dominant force. For the investor who value long-term ecosystem dominance over the short-term volatility, the bull case for SoFi is as robust as it has ever been. So prepare now. With that said, thank you so much for being here. See you in next one.